Botanix Pharmaceutical, ASX codes BOT. This is a stock that has recently fell 75%, currently trading what we call, according to BGS 20 strategy, our proprietary strategy, trading at technically discounted price, not only for the short term, but also for the long-term trend. The big question is, should we be buying this stock? Let's understand the fundamentals and also look into the technical analysis for Botanix that is currently trading at 17 cents and try diving in together to take a good conclusion whether we should be buying right now or not. Let's have a look. My name is Liz. I'm Chief Analyst of BG Trading Australia. Today is 11th of July 2025. I'll be reminding you right now that this is not a financial advice, just from BG Trading, sharing with you how we apply BGS 20 strategies in various stocks, normally small to mid-sized caps, sometimes large caps. We do avoid nano caps because of the risk, to chase 20 to 40% profit within 1 to 3 months. How we set up target stop losses together with our VIP members that have exclusive access to all our entry details before we place them. Yes, that's how we operate at BG Trading. If you're interested, just become a member of our free Facebook community, Buy, Grow, Sell Strategy for Share Traders, right here. And also, remember to subscribe this channel. We post on a weekly basis really interesting videos about potential buying opportunities, reviewing stocks that we are currently holding, and much more on this channel. Let's dive into Botanix. So I actually recently just put together a fundamental analysis of Botanix, and we even put some projections out there just to try to understand how is Botanix operating and then what this company really does. And like I said many times in this channel, if you're going to buy a stock from a company, try and understand what the company does. What do they sell? Do they generate any revenue? Do they only use investors' money to operate, but no revenue? What's going on? And that's what we're going to understand right now. So what is Sofra? Sofra is the flagship product for Botanix Pharmaceutical, which is a prescription gel used to treat excessive underarm sweating, a medical condition that a lot of people have, and known as primarily auxiliary for hyperdrolysis. That's the medical condition. So I'm not going to go through the medical condition, but I tell you this, I'm going to leave the link for this stock analysis, which is going to be free for anyone that watching this video, right here in the channel at the comments, right? Just take a look. If you're interested to dive in a little bit more through what Botanix looks like in terms of fundamental for the next 6 to 12 months, this is a great analysis for you, all right? We invest a lot of time, obviously, researching. I wanted to highlight that all the information in this analysis, even the projections, are based on the last 3 quarter results and the announcements the company had done in the market. So we just compiled all the information together and put there. We don't have access to the last quarter results and what's going to be in the future. But we took the liberty to project what we think the cash flow for Botanix will be, and we even took the liberty to try find the breaking even point which Botanix could turn into a cash flow positive, or even when Botanix could run out of money. And that's the biggest concern. That's why the market sold last few weeks 75% crash in this particular stock. So you got to be very mindful if you're going to trade this or invest into Botanix that most likely we will see a capital raising along the way within the next few months, right? But let's go step by step. So first, who can use it? This product, so approved for adults and kids over 9 years or older. So essentially, almost everyone except young child. Are there side effects? Yes, like anything those days. If you look into the prescription of any medicine today, you will see various side effects, right? And the companies now taking a much more conservative approach, especially pharmaceutical companies taking a much more conservative approach, so they limit the liability in case something happens as a result of the use of their particular medicine. In this case, dry mouth, a blurred vision, irritation and redness in the underarm, and also trouble urinating. So few side effects right there. You could argue this is very, very annoying side effects, but I urge you to take a look in any prescription those days to see the side effects, and you will see this is pretty like reasonably normal uh, if under a prescription. Now, Botanix is a big deal. Why? It's has attracted many, not only retail investors, but a lot of institutional investors, and I'm going to show you right here in this analysis. So, first new medicine approved by FDA specifically for this condition in many years. There's no much competition out there bringing this type of treatment in the market, in US market. Obviously, FDA is in the US and the biggest market in the world, let's say. And there's no many companies out there doing bringing new products. So Botanix came up with this, and then obviously has been incredibly successful in the first 6 months. And I'm going to go through these numbers shortly. And also, this medicine helps people who haven't had a good option before. So that's essentially what's happening right there. So if you can see here, the company managed to generate around 25 million Australian dollars in gross sales within the first 5 months of this product, right? The first 5 months, look at the sales ramp up right here, right? It's very compelling, to be honest. Now, obviously, the question is, okay, will Botanix be able to deliver similar growth in the next few quarters, like August, September, July, and the next few years? That's the big question. And obviously, anyone that bought Botanix at around 10, 15 cents back in 2024 and saw the stock soaring all the way to like 50 cents, it made huge money. And there's nothing wrong in shifting the funds into a different position, a different company, and highly de-risked because the profit has been taken. Remember, profit is only profit when is locked in. In this case, I can tell a lot of people have been locked in. But recently, Update has came up with some interesting figures. You can argue that they are interesting figures, but has spooked the market a little bit. So let's take a look on gross to net yield right here, which they call GNT, is fundamental metric used for pharmaceutical industry. If you don't know what it is, here I have explained for you, so you can understand a little bit. If you read new analysis about pharmaceutical companies, you can just start understanding the terminology of effectively of these type of fundamental metrics, And well, the yield has improved to 23% by June 2025, and is on track towards the target range of 30 to 40%. So that's essentially what they are targeting. So a little bit of regional alignment in the second quarter and expansion, as you can see here. Botanix now has a solid presence in the US, and obviously potentially going to increase and expand towards another market. With FDA endorsing this product and approving the commercialization, it's I have no doubt they can roll out to Canada and other countries as well. How do they expand? So obviously they are investing quite substantially in sales reps. And as per the last presentation, you can see here on how they sort of are operating and the number of sales rep at the moment on a payroll as well. Now, what are the risks involving holding this stock as investment? First of all, is GTN still evolving, so it really at the early stage, which is could be very rewarding, but also very risky. Just gotta make sure anyone that is holding or investing in this particular stock needs to be tracking on a quarterly basis to understand, to see whether the company is performing within the target. And that's what the market's going to be looking at, right? The problem, the stock fell, in my opinion, obviously this is just my opinion as an analyst, is that the company reported a cash outflow, which is a negative cash flow of $20 million. Essentially, it's burning $20 million per quarter. And they are burning through their cash reserves. And I even put it together an analysis, a projection here. If they keeping on this pace without a ramp up of sales, right, they would be running out of cash by Q1 2026. Yes, Q1 2026, right? So they need to improve the GTN yield and at least continues to follow this ramp up here in sales in order to deliver a somehow in the future a positive cash flow. And that's the big question the market has placed. Will Botanix become a cash flow positive? And if you believe it is, then obviously you can buy the stock now. But still, I believe, according to those projections, we will see a most likely capital raising along the way between now and the end of the year. So just be careful by holding this particular stock, or be prepared for a institutional and retail placement, which represent dilution of the current shares into more shares. So you'll be able to buy more shares cheaply, but we never know what the structure, the approach the company will take in order to deliver that, right? Now, let's take a look at this. The chart formation for BOT, right? As you can see here, using BGS20 strategy, right, Botanix has been trading on the upside, on the uptrend since effectively since March 2023. Incredibly good ride. If you look at the SMA 250, which is simple moving average of 250 days, that guides us through a long-term moving average. What is the long-term average of the price, right? And how it compares to what the stock value is today. And you can see here, the stock now is trading considerably below this long-term moving average, which becomes very attractive if the fundamentals are in line to a growth, to positive outcome over the next few quarters. That's the key thing. And obviously, then that's when it becomes speculative. Now, if you look at here, if BOT would be to test the long-term moving average again, we'll be talking about at least 160% gain from 17 cents from today stock price. So if you only use technical analysis and BGS strategy, we could argue here using those KPIs and indicators that this stock is extremely cheap right now. Okay, but again, we don't use one single indicator. We use few indicators together to make a what we call informed decision. And in this case, I like to analyze what the RSI looks like as well. And as you can see here, we don't see a bullish any bullish indication on the RSI, but we see exhaustion here of the sell-off. And that coincides with this long-term multi-year resistance level, which is currently sitting around 13 cents. So it's sensible to say, and that, by the way, 13 cents was reached 2 days ago, right? But it's sensible to say that we could see Botanix reaching again, like testing these 13 cents, and given the circumstances of this particular stock. Okay, so that's what I'll probably be looking at right now. This is like very high sort of a level projection here. I don't like to forecast, but I've seen many stocks doing this. Comes up, then comes down a little bit, right? And tests again the resistance, and then bounces back upon stronger than anticipated sell-off, which I think that's the case here. So essentially, what we have here is if we able to buy Botanix around this B level here, I would even argue below 15 cents. I think it could be a very good speculative entry into a stock that will be a capital raising along the way, but has been already highly de-risked. We would expect now at early stages for them to grow really, really rapidly. Because remember, 100% growth from nothing sounds really good into a financial report. That's why it excites people, but it's not it's not hard to achieve when you already grow quite substantially and you need to keep a strong growth pace. So we see many companies when they start, so say for instance, 20 million to turn $20 million into $40 million, that's 100% growth. It's not very hard, but then to turn $200 million, maybe within a couple of years, the revenue, hypothetically, let's say the gross sales is about $200 million in a few years, to turn into $400 million. And then it's a lot harder because we're talking about doubling $200 million sales, where $20 million sales into $40 million sales, it's relatively easy. And that's why the biggest money is at the early stages of any particular company, especially the ones that become successfully. Obviously, most of the money has been made already upon the FDA approval process, but now, because it's highly de-risked, I would argue that around this sort of support level, it looks to me a very reasonable, a very strategic, speculative entry into a speculative company that is start growing now. And remember, this is a company that are already generating revenue, right? And if everything goes according to the plan, they should grow quarter on quarter, keep growing quarter on quarter. If one quarter is not growing, then obviously this is a huge red flag, which you need to highlight. I don't expect a rapid movement towards the upside, right? It takes time, especially if there is a capital raising. But the most de-risked entry would be if we able to buy after the capital raising. That would be the ideal entry, right? But we don't know what price could be, the stock could be after the capital raising. So according to my projection, expecting a capital raise, so big red flag right there. However, the stock has been highly de-risked by falling 72%. Technicals, trading a technically discounted price for the short term, oversold for the short term, but could hang around this 15 to 17 cents level for quite some time, as traders and investors will be waiting to see whether there will be a capital raising along the way, so they can de-risk on a capital raising. So one of the things we offer for our VIP members is a little bit more comprehensive a view of the stock. And then if you become a VIP member, you will be having access not just to this analysis that you have already, but also to this hidden part, which should we buy but now. And some of the things that I like sort of highlighting into any analysis that I that I normally do is that in this particular stock, there was a strong institutional investor entry. Okay, about 30% of the company stocks are held by institutional investors, at least early this month. It could change now a little bit. And where there is institutional investors, you should have retail investors. And it's a good indication that it is a company that could have a good prospect. So this is my opinion on Boot. Should I buy now? Wait a little bit. Be mindful of a potential capital raising along the way. Be mindful that they are burning to cash quite quickly, and be mindful they need a strong sales ramp up to become a net cash flow positive, but still we probably several quarters ahead before that happen, right? Thank you very much for watching, and I'll see you in the next video. Bye.